Now let's talk about financial statement. Government-wide federal statement. So we're going to talk about the financial report of the United States government. This is an annual financial report for the federal government. It's based on the full accrual basis. And here we have a link you can click and get to the actual report. The annual report presents budgetary results and focuses on cash, monetary assets, and liabilities. The annual financial reports reconcile the difference and articulates relationships between the budget and the financial accounting results. So we're talking about annual financial report, okay, which is accrual-based. Annual financial report is divided into 6 sections. It starts with a letter of a transmittal and the management discussion and analysis. So you're gonna first, it's head of the treasury is gonna write a letter, right? So 2020 is from the Yellen, and then followed by auditor's report from the GAO. And there are 8 basic financial statements, and followed by notes to the financial statement. And we also have required supplemental information, RSI. For example, the sustainability, fiscal policies, right, which we have seen at the beginning of the lecture. We also have social insurance report and deferred maintenance and repairs report, and so on. And finally, we have other information like tax burden, tax gap, and tax expenditures report. Alright, so we're going to focus on the 8 basic financial statement. So these are the 8 basic financial statement. You have the statement of net cost, right? And the statement of operations and a change in net positions. Statement reconciling the net operating cost and the budget deficit. Statement of changes in cash balances from budget and other activities. The balance sheet. The statement of long-term fiscal projections. Statement of social insurance. Statement of changes in social insurance amounts. So we're going to take a look at them one by one. Remember, these are financial statement for the federal government. And for federal government agencies, they will be a little bit different, but very similar. We're going to talk about that later. Right, first, this is the statement of net cost. Okay, perhaps this is the easiest statement to understand. Right? Basically, this statement presents the full cost of operations for all the federal agencies, for all important entities, major entities, and all other small ones will be combined into all other entities. So the biggest one, the most costly department will be the Department of Health and Human Services. Right? The gross cost is $1,537, talking about $1 billion. Right? Offset by some revenues earned from providing services to the public, or to the other government agencies. 130 billion. So the net cost will be $1,407 billion. Right? This is it. And followed by Social Security Administration and Department of Veterans, Department of Defense, and so on. So we have the total net cost will be $7,412 billion for all federal entities. Next, it is a statement of operations and changes in net position. So this is very similar to the income statement for the private sector. So we start with all the revenues for the federal government, and then cost, right? And the net the change in net positions. You notice there are two separate columns. One is for the funds from dedicated collections, and the other is for other collections. And the funds for dedicated collections these are funds that are set aside for specific purposes, such as for social insurance purposes. So let's take a look at revenues. The largest revenues the federal government has is from the individual income tax, right? Total $2,854 billion, right? And corporate income tax, $317 billion, and other things. So the total revenue, $3,571 billion. And how about the cost? Right? This net cost, if you take a look at the previous statement, right, exactly the numbers we have from the statement of net cost. Right, we have the net cost, we have total cost, total revenues. Then the difference between these two is going to be the net operating cost or revenues. Obviously, this is a deficit, so it's a net operating cost. Equivalently, that's a loss. Also, you notice there's an additional line called unmatched transactions and balances. $11 billion. This is a real problem. This is something that the federal government, when they consolidate all their statement from other agencies, it cannot match those numbers. Unmatched, basically. Something's wrong with their accounting system. And because of that, the auditors has to issue a disclaimer because this is not acceptable, right? Something's wrong with the accounting system. Every year you're going to see the unmatched amount. All right, so we start with 2020 with almost $23 trillion deficit in net positions. We're going to add another almost $4 trillion, right? By the end of 2020, the net position will be almost $27 trillion, okay? Deficit. Wow. Next statement is reconciliations of net operating cost and budget deficit. So in this statement, we identify the differences between the accrual-based, right, the operating cost, net operating cost. This is a accrual basis. With the budget deficit, we're gonna reconcile the differences. So equivalently in the private sector, you can see similar statement in the cash flow statement, the indirect method, right? We're gonna reconcile the net income to convert net income to the operating cash flows. We're gonna do similar things over there. Right, basically we're gonna add back expenses that are not related with cash outflows, right? We're going to add all these expenses that are non-cash related, and also the amortization expense. For sure, it's not cash related. Add it back. We also need to adjust for those cash payment that are not expense related. Right, for example, the acquisition and capital assets, right? Securities and investment, inventory and related properties, and these are all recorded, reduce the budget, increase the budget deficits, but it's not related with expense at all, right? Because they are capitalized. So we're gonna subtract all these from the net operating cost in order to get reconciled with the budget deficit. So after everything has been done, of course, there's an unmatched amount will be reported over here. After everything has been done, we can reconcile the net operating cost with the budget deficit. Okay? Next is a statement changes cash balances from budget and other activities. This can be viewed as the cash flow statement in the private sector. Right, this shows a cash-based the budget deficits. We can add back all the non-cash payment included in the budget. We're going to subtract cash flow from the activities not included in the budget. Now, for example, interest paid. Interest is not in the budget. So when we get to the our cash balances, we have to add, we have to subtract the interest payment from the budget numbers. Okay. We can also adjust for the cash flows from financing activities. Right? The borrowings is increase the cash, a repayment decrease the cash. All these are not included in the budget. So after all the adjustment, we can reconcile the difference between the budget deficit with the cash on hand, cash assets. Okay, ending cash and other monetary assets balances. And next is the balance sheet. This is very similar to the balance sheet for the private sector. Right? It reports the assets, liability, and the net position for the federal government. Right, the largest assets is cash and other monetary assets. This number can be also seen from the previous statement, right? Followed by direct loans and loan guarantee receivables, and the property PP assets. Remember, the stewardship land and heritage assets are not included in this report. Remember that's almost 28% of all the U.S. land. Okay, the monetary value will be enormous. And the largest liability is the federal debt, for sure, the interest payables. And remember, Social Securities, most of Social Securities are not reported as liabilities, only if they are due. Okay? And the difference between the total assets and total liability will be the net position. Obviously, this is a negative, more liability than assets. And next is the statement of social insurance. Right? In this statement, it provides the key actuarial information regarding the social insurance program obligations. Right? They're talking about Social Securities and Medicare, basically. And all these numbers are calculated based on the present value over a period of 75 years from this year. Okay? So if you look at, we can just look at the Social Securities and Medicare. If you look at the 2020 actuarial value, the expected or current revenues from all current and the future participants will be $73 trillion. Right? But the total expenditures will be $93 trillion. So for the next 75 years, right, we're going to see a gap between their total expenditure and total revenues for their Social Security program. And similarly, we're going to see a gap for the Medicare A, Medicare B, and Medicare C. Okay? So in fact, for all these programs, we expect to have more expenditures than revenues for the next 75 years. Right, next is the statement change in social insurance amounts. So this statement shows the reasons for the change in social insurance obligations during the year. But as we said, we only capture a small amount of social insurance obligations, and mainly because they are due. Okay, so compared with the actuarial results, these are small. These numbers are really small. And the final statement is a statement of long-term fiscal projections. So this statement displays the present value of projected receipt and non-interest spendings under the current policies for the whole federal government. Right? Just like these results are based on the actuarial results projecting for the next 75 years. Okay, so if the policy holds, this is going to happen in the next 75 years. Obviously, the total receipt will be much smaller than the total spending. We're going to see a huge gap. We're going to see a huge gap, about $80 trillion. And equivalently, that's almost 5% of the GDP. And this statement is prepared before the COVID-19. So if we have to restate, or if you look at 2021, the number will be the gap will be even larger. So what does it mean? Basically, it is saying that, right, holding the same policies for future budgetary resources will not be sufficient to sustain public services and will not be enough to meet obligations in the next 75 years. All right, so let's also take a look at the financial statement for federal agencies. And for federal agencies, the FASB reporting models is similar to that of federal government. The number of basic financial statements varies with the type of agency. Okay, and for example, we have our example is from the Department of State. Okay, and Department of State has the following statement. It has a balance sheet, or it's a statement of financial positions. It has a statement of net cost, a statement of change in net positions, and a statement of budgetary resources. And then a statement of reconciliation, net cost of operations to budget, and a statement of custodial activities. Okay, we provide a link to the actual financial statement you can download. All right. So first, that's a balance sheet for the Department of State. The Department of State, like or most of other agencies, it has numerous funds. For example, the general fund, special fund, revolving fund, trust fund, and also deposit funds established at the Department of the Treasury. Okay, so all the money are in the Department of Treasury. And also the Department of State has a lot of subunits, and it has consolidated, for example, the U.S. section of the International Boundary and Water Commissions, which is our important commissions that it is regulating the U.S. boundaries with Mexico. Okay, it also consolidated other agencies like International Boundary Commissions and the International Center. Okay, all the information can be found in the financial statement. So let's talk about the balance sheet. So as of 2020, the largest assets will be funds balance with Treasury. Okay, and followed by the PP assets. The Department of State has a lot of properties globally. And also the Department of State has a few agencies that own a lot of vehicles and aircrafts. So all these are included in the PP assets. And then the department also has $20 billion investment. Most of these are government treasury notes or treasury bills. Right, stewardship properties and equipment are not reported, but disclosed. In terms of liability, the largest will be the after employment benefit liabilities. So the difference between the total assets and the total liabilities will be net position. The net position has two parts basically. The first part is unexpended appropriations. Unextended appropriations are the sum of undelivered orders and unobligated balances. Right? Basically, they are the appropriations unused. Right? Unused. The second part is if the appropriations or the budget has been used, they become the cumulative results of operations. Cumulative results of operations. The two parts. And for each part, it's separated into funds from dedicated collections and other funds. Alright, so the total net position for the Department of State is $76 billion. It's positive. Next is the statement of net cost. And in this statement, it reports the department's gross cost and net cost by its strategic goals. Right? List 4 strategic goals. For example, the first one is protect American securities at home and abroad. For this particular goal, the total cost less any earned revenues, net cost will be right? It's $5.6 billion almost. And the largest cost comes from the number 3, goal 3, promote American leadership through balanced engagement. Right? Almost $14 billion net cost. So the net total cost for the department is $32 billion. So this provides decision makers a basis on which to assess agency performance. Okay. Next, we have the statement of change in net position. Right, basically, it explains the change in net positions. Right. It explains how entities financed its net cost. So the department financed its cost from basically 2 sources. From the unexpended appropriations from the prior years, it's almost $46 billion, and also from the budgetary financing sources. So remember, in the balance sheet, the net position is reported in 2 parts, right? The unexpended appropriations and the cumulative results of operations. So now we're going to explain the changes. So we're going to explain changes in these 2 parts. Changes in unexpended appropriations and changes in cumulative results of operations. So first, changes unexpended appropriations. So beginning, unexpended appropriations plus new appropriations received, right? Less appropriations used. After other adjustment equals the unexpended appropriations. By the end of the year, almost $47 billion. Okay, regarding the cumulative results, we also have a beginning balance plus any appropriation used. Once they're used, right, it becomes the cumulative results. And there are other adjustments. We're going to have the end of the year cumulative results of operations, less the net cost. And equals the total cumulative results of operations. So the total cumulative results operations plus the total unexpended appropriations equals the net position. And this number corresponds to the net position reported in the balance sheet. All right, next is the statement of budgetary resources. So this is prepared in budgetary basis or cash basis. It reports on the amount available from both current and prior year appropriations and entities' cash outlays and newly incurred obligations, or in cash basis. The total available budget, right, is from the prior year's unobligated balance plus the new appropriations, and also plus the spending authority from offsetting collections. And these are the fees, for example, fees collected that can be used for other budgetary operations. For example, the fees charged by the department for passport, okay, is part of these collections. The total budget, $77 billion. Then next section explains how these budgets are used or unused. Okay, among which $49 billion are used for obligations. And then the rest are unused. Right, $26 billion are apportioned, unexpired account, unused. Unapportioned, unexpired, and small part of the budget are expired. Okay. So the total unobligated balances was almost $28 billion. So unobligated plus obligated equals the total, the budgetary resources, which is this number. Okay, this explains how we get the budget and how the budget is used or unused. And then finally, we have the outlay, the cash payment. The net cash payment is $34 billion. Okay? Because some of the obligations, if you used budget to obligate, it does not mean you will pay immediately. You can pay later. So the outlay will be smaller than the new obligations. There are some other financial statements. For example, the statement reconciliation of net cost of operations to budget. It links the statement of budgetary resources to the statement of net cost, or we have seen that in the federal financial statement as well. And also we have the statement of custodial activities. This is similar to the agency fund. Okay? Because these results custody activities or these funds are not reported as financial or budgetary resources for the Department of State. Okay, they just manage these accounts for somebody else. So the Department of Custody activities report those things. All right, that's a financial statement for the Department of State, federal agencies. The federal agencies also are required to report the performance, their annual performance report. So basically, each agent must prepare a performance plan in which they're going to set up their objectives, right? Their quantifiable and measurable goals for each objectives, and many other informations. So by the end of the year, they have to review their achievement, and their performance, explain any deviations. All these are reported in their annual performance report. And we have a link. You can take a look at the Department of State's annual performance report. And finally, international standard setting agencies. The International Public Sector Accounting Standard Board, IPSASB, has issued many standards. Okay, and these standards are intended to improve both the quality and the comparability of financial reports for governments at all levels. IPSASB makes clear that public sector accounting should be on full accrual basis, not cash basis. So per its standards, right? For example, PP assets will be capitalized and depreciable, and all these are very similar to the FASB standards. However, IPSASB cannot require individual countries to adopt its standards. It merely encourages them to follow these standards. All right?